In stocking up today, the VIX, which measures uncertainty in the market, is trading at a lower level. Sometimes that can mean there's a low level of anxiety in the market or even complacency in the market, but not always. If you're actively trading or watching our show, you may feel as though there's some angst underneath the surface. Let's bring in Matt Moran of CBOE Global Markets. What's your read, Matt?
Its long-term average since 1990 is above 19. And so some people do jump to the conclusion, boy, there seems to be a lot of complacency in the markets. And you think with worldwide tensions, trade, possible trade wars, things like that, you'd think that there'd be more nervousness in the market. But one thing I would like to suggest, Angie, though, is look at other measures. CBOE offers a variety of measures to try to get a handle on market complacency and market fear. And one of the main measures is the CBOE SKEW index, SKEW.
A black swan event is something that is unprecedented or unexpected, such as a war or terrorist attack or even a big development in technology, anything that catches people off guard. So what are you seeing as far as traders possibly preparing for something like this to happen?
All right, so the SKEW index measures the amount of black swan risk or fear in the market. So what you're talking about there is how does the out of money put implied volatility compare to the at the money or the out of money call volatility? So when the at the money puts have very, very high implied volatility, when people are buying those at the money puts, oftentimes you see a rise in the SKEW index. If the implied volatility were even, if you had the same implied volatility for the out-of-money puts as for the at-the-money puts and calls, then the SKEW index would be at 100. But its long-term average has been 119, and certainly recently we've seen the SKEW index at very, very high levels.
This week, CBOE SKEW index has closed above 150 for a few sessions now. In layman's terms, describe what you're seeing as traders and investors are hedging and actively protecting their portfolios.
Yes, well, we're definitely seeing some interest in black swan hedging. As a matter of fact, that was a recent headline of an article in a Bloomberg story as far as surge in black swan hedging. And why would they say that? Well, with the SKEW index, you have a price history goes back to 1990. And prior to 2016, you never saw the SKEW index get above 150. That was the upper limit. It never got above 150. But since that time, you've seen the SKEW index get above 150 quite a bit. So you do see a lot of interest in black swan hedging that very deep out of the money risk in my portfolio, and the implied volatility on the SPX options for those out of the money puts has risen, as has the SKEW index.
Sounds like there's a lot of risk management going on out there. Thank you so much, Matt, for that update.
Thank you, Angie.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.